Good morning, traders. Welcome to the TMT Stock Market Strategy video for Wednesday, January 6th. Another day of selling and actually another day of chop. This is the second day of the new year, and this is just ugly. I mean, this is not what you want to see here. Take a look at this. I just want to kind of show you what we're dealing with here, and we just have this chop going on because all of the moves are happening in the pre-market. And as I'm recording this early morning Eastern time here in the States, we are down about 25 ES handles. That's a big move already on the opening. So hopefully we get some movement here, but as of right now, it looks like it's going to be another wait and see type thing. And remember, guys, I get a lot of emails. This is something you don't want to get involved in. I mean, look, if you're a scalper, that's great. But if you're a trader looking for a trend, we know that we have the trend down. But when the moves are happening in the pre-market, very tough to get accuracy and, of course, high probability trades. So what you do, step aside, cash as a position, and just wait it out until you can actually get a good digest of where this market is headed, and or you get a great setup that's based on your trading plan. Okay, so again, another day of chop, 2 days of the new year. We're down 25 handles in the ES right now, early morning Wednesday. Let's see what happens here. At one point, if we get enough selling in the pre-market, I would suspect we get a little bit of a reversal. Turnaround Tuesday was a dud. As you can see, that tells me, guys, there's a lot of selling going on. Remember, risk off happens extremely fast. So we have to pay attention to that. For those of you who are swing traders and long-term investors, again, I've been mentioning we're going to have some problems early in December. That was the time to either hedge your portfolio or reduce your long exposure. Now that you're into it, your volatility is up, and of course, there's a premium for that, and you're going to pay for that if you are looking to hedge. So right now, to me personally, I'm not calling a top at the moment, but I'd like to see the next rally, and if the rally fails, I'm going to probably end up calling a top in this market, at least in the short term. So I want to see another move back up. We're down 5 days in a row. I'll show that to you in the analysis on the indexes, but we're down pretty big 5 days in a row, guys. Partly, of course, the few days of last year. So not looking too good. We did not make new highs, and I mentioned that as well. We don't make new highs. I think the market's going to be in trouble. Issues with China. Now, North Korea is testing nukes. So, I mean, it's just not a good thing out there. And there's also another excuse to sell stocks. So we have to use caution, and that's why taking overnight risk is very risky, at least right now, okay? Unless you can stay up in the middle of the night and you're trading futures, it's very risky to take any overnight exposure. And that's something that I have no no qualms about doing. I'm definitely wouldn't be doing that as well, at least not now. So it looks like that we may be into a correction phase, and then we'll see if this thing turns into a full-fledged correction. Remember, the first 2 months, January and February, of the first 6 months are usually the worst, okay? Just keep that in mind. All right, also, real quick, I want to make a note. We have ISM non-manufacturing that comes out at 10, a bunch of those ISM numbers, and don't kid yourself, they are market movers, okay? So if you don't have a position, try to be light going into 10 o'clock. 10:30 crude oil, I'm going to have a comment on that. And, of course, 2 o'clock today, Eastern time. These time frames are all Eastern. We have FOMC minutes. Again, that will also be a market mover. All right, so just kind of keep a heads up on time on that. All right, let's go right into it. I want to show you a couple things here. In the premium video for the subscribers that we have, I really go extensively on here. I can't go too extensive, but I want to just point out a few things. Here's the XLP, XLY, consumer staples versus the consumer discretionary. Obviously, staples are a safe haven trade, if you will, protection. But when you see the average here, when this goes up, you see that the markets are moving lower, right? You could see that here and here, all right? When this is going lower, right, that means there's risk on, the markets move higher, all right? Same here. And now what's happening again? We are getting this move up, another sign that the markets should or at least head lower. And I think that 1875 here in the SPX and the cash, I think you're going to see that. I definitely think you're going to see that. Again, I cover this extensively in the premium video. New York Stock Exchange, 52-week lows. If you see these spikes, we usually get a bottom here on these circles. Well, guess what? We're nowhere near it. So that means to me that, again, that 1850-ish, 1875 in the cash, we're looking to get. I'm looking for these spikes. And again, I follow a lot of these indicators, which we show you, and I show you how to read them properly so you can get a better handle on bottoming and top formations in the marketplace. McClellan oscillator, okay, it's right now reading neutral. That means there's plenty of room to the downside. Plenty of room to the downside, okay? Don't kid yourself that we're oversold. Now, we are oversold, for the intermediate, really, really short term. But that doesn't mean that we can't go lower, okay? Now, I want to comment on dollar, gold, and, of course, crude oil. Real quick, we mentioned this bullish falling wedge. We broke out of it. We back tested, filled the gap. We're headed higher here. This is going to challenge this area. I believe that we will challenge this area up in this corner, which should get us somewhere around about 27-ish. That'll put pressure in crude oil. It should also put pressure in gold. However, when you have a risk-off environment, gold will shine because people will rush to the metal to park their money, park their investments until the volatility subsides, okay? I do think gold does go lower as well, but gold is looking bullish right now, all right? So there's the dollar analysis, again, extensively in the Premium Pro Trade Elite video. So let's take a look at the USO. And I mentioned, guys, you remember, 11:30. We talked about people calling a bottom. I said nowhere near it, and sure enough, we're headed lower. I think you're going to get into the low 10s. Crude oil contract, the CL, I'm looking at a 32-ish print, anywhere between 32, 33, in that area. We could overshoot to 30, 31, guys. Remember, this is a commodity, and it does move. So just use caution here. Not looking to pick a bottom, but I'm waiting for the signal that crude may have bottom. Right now, I don't see it. I do think crude goes lower from here. Gold, as you can see, the GLD, this is the ETF contract, looking pretty good. We're just underneath that 50-day moving average, and we do have this sideways consolidation. Let me just kind of show that to you right here. You can see that clearly, the sideways consolidation. Okay, breakout and or breakdown. I mentioned this yesterday in the video. Let's keep an eye on this break. Let the commodity tell us which way this market is headed. Okay, again, looking a little bullish. We see prices below 100 and below 1,000 in the GC contract. Okay, that's right now. Again, things do change rather quickly when we have a high volatility environment. All right, now let's get into the spiders, which is obviously the tracking S&P 500. Before this area here happened, I said, look, this could be a bull flag, or this could be an M formation. Well, I'm going to really take this. This is not a bull flag to me anymore. Everybody, you can see this is a full-fledged M formation. Here is your neckline, and we broke the neckline, okay? So this measures from the top here to here. This is where we're going to look somewhere in this area. Again, I will give you targets, guys, when this starts to break even lower. Now, we are going to be lower today. That means we're going to take this out, this doji. We're going to take this out. And another thing, too, guys, in the and I want to show this to you. And this is another reason why, if you're trading alone, you might want to be entering our room, because we talk about dark pools and we talk about how to read the dark pools, and you'll see our analysis here. Here's a quick snapshot of our room trade that we had when the markets actually just popped up. You could see here a really nice signal here. So again, if you're not trading, if you are in the room and you're not trading, you're trading alone, I would definitely suggest you come into the room here, and we can give you some real good signals here of what's happening in the marketplace. But again, guys, very quiet, very subdued trading for the last couple of days, and a lot of our indicators really tell us, when is the proper time to get in, when's the proper time to get out. And again, when you're down that big, you really need to, if you're trading by yourself and you're new, you might want to take a look and come into the room, because it'll at least give you sight. Say, look, guys, even though we have a signal, let's sidestep the signal, only because markets are down, the risk reward really isn't there. Again, just by an example approach. But anyway, let's get right back to the spiders. And you can see here, we talked about this already. I am personally taking this bull flag out. And I'm going to look at this more of an M formation, that we've actually broke this M pattern formation. Again, guys, we got a gap down here. I'll give you some downside targets. What I wanted to show you was, you could see here, I mentioned Oh, excuse me. I saw these trend lines from the RSI and the MACD. We need to really break back above it. But look what's happening here, guys. Lower lows, lower highs. Same thing with this formation again. Okay, I am looking for lower prices again. We are getting a little bit. You can see here long in the tooth, meaning to the downside. 1, 2, 3, 4. We had a doji day again. As far as dark pools are concerned, if you're interested in that, let us show you how dark pools work. You could see this doji day is really an accumulation day of shorts. Actually, a lot of times when you see a doji, don't be fooled that okay, we're going headed higher. Yes, I would like to see that, and yes, sometimes it does happen. But a lot of how these dark pools play, they usually accumulate shorts on any pop, and then they look to sell it the next day. So be careful with doji days. Learn how to identify what a real doji is. It's not just indecision. There's a lot more to it now that the dark pools are taking over. Okay, so just keep that in mind, guys. Transports. Bear flag, broke the bear flag, and again, it looks like obviously the 128.12 from the August lows will be touched. All right, now again, this is what we've been talking about, transports. And again, the Russell, ugly, ugly looking charts. These are two of our leaders. Without them, the markets are not going to move higher. And that's why I'm very close to calling a top here in this market. I want to see what the next rally looks like. And if it does fail and gives us a lower high, more than likely I'll be calling a top. Diamonds, you can see here, yet again, I'm taking the bull flag pattern away. To me, it's just a downtrend channel. Broke it, again, with this M formation. We talked about the two patterns, which one is going to be. You could see this here, and then, of course, this is your neckline, and we're right at it. We'll break it today. More than likely, we're going to head lower. And what do I mean by let's wait for the next pattern, the next bounce? Well, this is what I'm looking for, all right? We have, well, let me just get the wrong one. We have the formation of this M pattern, right? Now, what I'd like to see is I'd like to see a break, right? And then a bear flag into resistance and then fail. And then that will give us this sell signal up here somewhere. And then if that happens, or even up here, even to the 200, if we break that, if we take this out, even if we get back to the 200 area here, if we take that out, and then we go lower, we get a reversal candle. That, to me, will say the top is in place. Okay, now this is just the diamonds, but we'll be looking at all of the indexes. Lastly is the Qs. Remember, technology usually shines here, but the problem is we do have that CES electronics show. Apple has a huge head and shoulders pattern. Again, we talk about this in the premium video, guys. Watch Apple. If it starts to break that head and shoulders, I think Apple will take and help the markets move lower. Hope it helps, guys. A little bit long. I apologize, but I wanted to get some more information out to you. Be careful trading today. We're going to open really big to the downside. Just be careful with the shorts here, guys, all right? See what happens. Give it some time before the market, before you get into a trade.